Or is it Memorex?
Yeah, we're live. Memorex. I don't think there's probably not many people in here that know what VHS is. So, you probably got to be born, probably got to be a Gen Xer to know what a VHS is, maybe. But welcome everybody. Sunday night. What is it? June 6th. I got to look up the date. June 6th, 2021. Appreciate everybody tuning in. It's been a nice day out, a little hot. Yesterday was 90 here. So I think we got up to 80, 81, 82 today. I mean, it's Denver. It doesn't get too hot here, but I know where you're at. You're pretty much flying right next to the sun. What, 100 plus degrees?
Was this past week was 106, 104. This week gonna cool down. We're actually gonna get down into the 80s, maybe even high 70s. So I'm
Wow.
welcome. I'm excited for that. Trust me.
Yeah, push off all your jobs.
Yep.
Yeah, haven't lived in California and Crappermento, for example, for how long did I live in Crappermento? 14 years. That place, you can get up to 120 there, right? Is that what the summer gets up there in the valley of like Fresno area?
No, it's like 110 is probably the extreme end. I've seen some 112s, 113s. But yeah, it's anything above 90 to me is like I don't want to go outside. You know.
That doesn't matter to me. I'll hike in 90-degree weather. I'd rather hike in 90-degree weather than 40-degree weather. But that's just me. Something about the cold weather bothers my ears and stuff. But welcome, everybody. We got Chase in here. We got David Hipson. We got Gerry's wife here. And we got Dividends and Dojis. Arcadia Farm. I've heard that name. I don't know if I've seen that channel name. But Arcadia Farm, I've heard the name. Is that like a farm to table type of thing, or what? You got pigs? You raising pigs? Let me know. I need some bacon.
Got some bacon, quality bacon.
Rebecca Thompson, how are y'all doing? We're doing great. We got dividend driver James, and I don't know where he's at right now. He could be at home, or he could be on the road talking via satellite. I'm just gonna do a recap of my week, and honestly, there's not really a lot to talk about as far as my week because, you probably saw the thumbnail. I got an eyelash in my eye apparently, but you saw the thumbnail, and I got those 30 to 45 day DTEs, which is causing me to sit on my hands a lot. And unfortunately, that can be a gift and a curse because it can make you do some stupid stuff sometimes, especially if you're used to taking profit every day. So last week, let's see here. If I pull up that portfolio, I took profits in 4 positions. NVIDIA, that was the short. I still have a naked call on now because I took the short off. So it was a strangle. Now it's just a short call. $171 there. I took TNA off for $108, took LMT off for $99, took XOP off for $56, for a total gain last week of $436. And average across all 4 of those was 58% profit. So an average days held was 10 days just for those 4 positions. So that's probably going to be my wheelhouse. I did put some new stuff on when I did take that stuff off. So not everything. I didn't put everything new on. So I put EOG on. I put 2 of those on. We can thank, might have been James for that. I'm not really sure. Do you remember if it was James, Gerry?
EOG, yes, it was.
Yeah. So got 2 of those on. And I went ahead and put 6-pound tiers on for a 18 strike. Looks like I put a Beyond Meat on Monday, and it looks like I put another XOP on, even though I took one off. I put a new one out going out to July 16th. So just to close a little bit of stuff out, push a little bit of stuff out, further out from that July 2nd to July 2nd to that July 16th date, get a little bit more premium in there, get a little bit more stuff working for me. And some of you all are aware, I also did buy about 100K worth of QYLD, NUSI, and JEPI in the options account. And I'm just trying something new in there. That did unfortunately take about 18K of buying power up for that 100K worth of income ETFs, which would generate about 700 and some odd dollars a month, 760 or something like that. And I'm not sure I'm going to stay with that. I might just stay with one of them, probably QLD, maybe stick 30K in there, leave it in there. It drops down by another 30K, and it kind of cap it maybe there. I just, because of the way I look at it, that 100K, which is taking 18K buying power, I can generate, in a safer manner, in my opinion, less downside risk with an options. Because if I'm long all those income ETFs in there, it doesn't matter. The market goes down 1%. That's $1,000, right? Whereas, if I did like a 2,500 put on Amazon, which generates me about $600, Amazon's got to make it like a 30% move down, right? Not right now. It might be like a 25% move down. But what's more likely to happen? The market going down 25%, which would affect me $25,000, or Amazon going down 25%. I'm affected directly if the market goes down with those income ETFs versus, would take Amazon going down 25% to affect me at all, right? Yeah, okay, maybe the option to go up in value as it keeps dropping, but still 25% to be put to me, right? So I'll probably end up just dumping that whole strategy. And then just kind of want to mention also, James did point a video out from Tasty Trades, more about kind of keeping your buying power in check, just a kind of a good way to, maximize your buying power, right? And it's not necessarily the whole reason why I hated spreads was just because of the protection aspect of it, right? So I'm going to just use an example here. I had a 2,500 put on Amazon, got $600 for it. And that was about 18, 19K in buying power that thing took up. And I just, for shits and giggles on Friday, I went ahead and bought a call. I actually have a naked call on too, but I bought a put down 500 wide. Okay, so a 2,000 put down from my 2,500, and that cut the buying power in half. So, and it cost me $123 for that. So $600 minus the 123, and what does that come out to? 460 something, whatever.
477.
470, something like that. So think about that. So if it cuts the buying power in half, you could throw two of those on and make more money with the same buying power, or you can throw another ticker on, which is probably what I would end up doing in the future. I'll throw another ticker on. Like I said, I don't give a rat's ass about the protection aspect of it at all. But literally a 500 wide, and I throw it way down there, and it cuts the buying power in half. Geez, that's a deal. So that's a killer video. Matter of fact, I'll probably throw it in the resources area and then just pin it there. So, all right. Well, I'm going to go turn this over to Gerry. He can talk about his week and, give us a recap, Gerry.
Yeah. So my week was, it was actually pretty good. It really was. I didn't do a ton of trades, but I feel like I'm back in the groove. May was, it was really a roller coaster type thing. And this, even though it was a short week, was probably one of my better weeks so far. So you'll have to probably tune in to my Wednesday videos to see every trade I made. But I will say I did. Where'd I go? Just in my Interactive Brokers account, I cleared $590.50 in realized profit for the week. If I include some of the other stuff that I do outside of Interactive Brokers, because I do have an accounts in Fidelity and Chase, And some of those things, I put on some short-term puts and calls in there that I go ahead and realize as profit because I don't actively trade in there. If I put something on in there in my Roth IRA, I usually just let it go. So if I include those, I almost had an $800 week last week. So I can't complain too much. Yeah. But I did do some gambling. I did some gambling only on one trade. I gambled some AMC on Thursday morning. Hindsight, I mean, listen to the way I'm talking about it. It's gambling. It literally is gambling. So once in a while, I have to scratch that itch, right? But I did it once. I sold a naked call that expired in one day. And
how far up was it?
It was a $145 strike. And I think AMC at the time was at like 60. But it was falling. So I sold it. It continued to fall. And I locked in a 50% profit on it in an hour. So
why didn't you just buy a put? Just curious.
I could have done that, but then, what if I waited? And then, because see,
you mean waited until your naked call could be tested?
What if because see, it could have went wrong on both sides, right?
Well, buying the put doesn't hurt you, in my opinion.
Well, because it reversed course after I had bought it back and went mooning back up again.
So buying a put, folks, is not gambling, in my opinion. Granted, it's kind of like a day trade or whatever, but it's not gambling. What he did is definitely a gamble in my like that could have wiped his account out had that thing had just a short squeeze and popped up, because that could pop up to 140 easy.
It could, problem. And that's why I called it a gamble. That's why I did not, because it presented an opportunity again about an hour after I closed the trade. It went back up to $2.40 or something, and I could have got in it and it would have worked. But I don't like going to wells more than once. Sometimes you can fall into that well and that well will suck you up. But
well, I'm glad it worked out for you.
I'm glad it worked out for me too. And I'm glad I didn't get back into it, but it scratched.
How much stress? Just curious. Did you have any stress? Did you have a butt pucker during that trade?
No. Basically it worked correctly the way it was. It kept.
So when you put it on, you have butterflies, nothing?
Oh yeah, I was like, I shouldn't be doing this. I really shouldn't be doing this. But after I put it on, it went the exact right way. It just kept falling, and I got out of it, and that was it. So that was that. That was AMC. I also did a buy right. You'll have to look at more details, but I did a buy right on a REIT, AHT. And I noticed that people are talking about it now all of a sudden, but I had no idea about this ticker. This was just total luck on my part. I bought 300 shares and sold a call, and that sucker just flew up in one day. I kind of wish I didn't sell the calls, because I could have just took quick profit on it, but that's the way it goes.
Well, so I'm just curious, have you moved to a 30 to 45 DTE at all, or are you still doing the old put stuff on, take shit off, take shit on, or put shit on, take shit off method of taking profits every day and all that?
I'm in transition.
Yeah.
I'm in transition because it's going to take a while to filter through, because I still have stuff that expires June 18th, I believe.
Every expiry.
Yeah, I still have that. So as I work through that, everything I'm putting on right now is 30 to 45 days. So as I work through that, but I've noticed though that's everything I closed out was between 0 and 10 days of holding. Everything I closed out last week.
Gotcha.
And they were all above 50% profit.
I think it's smart to do that.
And so, a lot of that stuff, that I put on thinking, okay, this is a 45-day hold, ended up being a 5-day hold. So
did you actually put new stuff on for the same expiry? Like going out 45 days? Like, because the stuff I've been taking off was already 45 days. I took it off. It's up 50%. You put new shit on for the same expiry?
I haven't. I haven't yet, but I'm kind of struggling with that, right? Because
Yeah.
I'm spending my day like, okay, what do I do now? Because this was the play that I just put on 3 days ago. You know, this is what I wanted to be in, and now it's gone. And now what do you do, right? So you kind of have to. It's tough. It's tough to find enough stuff to put on. To be honest with you.
It's a little bit of a transition, a learning period or whatever, because I have $5,400 of premium on right now, and I had almost six, but because if I took 100% of that, that wouldn't get me to my goal. You know what I mean? Like if I didn't, so it almost makes sense to take stuff off that's like plus 60%. 50 seems pretty easy. Like you might, I mean, if it's 50 and it gets there pretty quick, take it off, put some new shit on. But it's like then you run into the issue where I'm taking off quality positions. Do I put on the same positions for if the same expiry, right? I don't want to go out 60 days, right? So
Right.
if it's a 45 DTE, you take it off, it's up 50%. You know what I'm talking about? So we did
Yeah.
talk about this last week. That's
Yeah.
definitely something I need to figure out.
And you may not want to chase the strike up because I mean, if you took it off, that same ticker, that same expiration is going to be you're going to have to move up. You know, say from $100 to 105. You know, that is that going to increase
I
your
have been
risk?
doing that.
Yeah, is that going to increase your risk though?
Of
Uh,
course.
you know, as you keep on going up. So
Yeah,
it's hard.
definitely.
It's definitely it's kind of a juggling act there.
Yeah, I think the key is just maybe go with either more contracts in the future, not a lot more, just enough on the really quality stuff, or just a slightly higher DTE maybe, or sorry, a slightly higher delta maybe. I don't know. I haven't figured that
Yeah.
out yet.
Yeah.
He's in
I'm
Nashville.
Nashville,
Um,
Tennessee.
we got chickens. So I have a question here regarding the chickens, real quick. What? I'm not talking about beet juice today, but so if there's a rooster around, right? Let's say there's a rooster around, hunting and pecking and struttering or whatever. How do you know whether or not those eggs that just came out have been fertilized or not? And I mean, granted, if you're going to pick them up every day, then maybe it never has a chance to turn into something. But one of these days, I just feel like I'm going to crack an egg open. There's going to be a little chick in those damn things. And that scares the shit out of me. And here's the thing I want to have my own chicken someday, and I'm worried about that. I'm going to make some freaking scrambled eggs, and a freaking chicken pops out. That's scary. So, anyways, uh, first world problem.
Probably has to do with the heat or something. I don't know.
I guess if you take them every day, they could be fertilized and it doesn't really matter. But
Mm-hmm.
welcome, James. We got alternative investments. What are you invested in alternative investments? Options?
Is it alternative?
Are options alternative?
I think they would be considered their alternative.
Nah, I don't think so. Dolls or something would be alternative. Um, SAO 209, the Stockton area code here. Can you guys talk about maintenance margin IB, how it works? Is there fees? This is like a very difficult thing to discuss because it's kind of complicated. Just in general, if you open up a put on, say, let's just go with Amazon, right? IB, I think it's 10%. Is that what it is? Or is it higher than that?
I was going to question you on your Amazon thing you were talking about there because I went in last night and I went into it and it was way more than what you were talking about for me. I don't know if it's different
I got
because you're on
portfolio margin turned on.
portfolio margin, right? So for me, that 2,500 and buying the 2,000 did absolutely nothing. So
What do you mean it did nothing?
it did nothing. My maintenance margin was exactly the same. The margin impact.
That's
So
odd.
I'm wondering if it's a. I was going to talk to you about that last night, but then you disappeared on me.
If
But
I look at my Amazon that I have on right now, so the 2500 put that I'm short on, if I do show margin impact on it, it's minus 1500. So if I do the 2000 put that I bought, and this is just, that's showing 8800. So it kind of flip-flopped there.
I think it's also because you have a naked call on as well.
It could be that too. So a strangle, right?
Yeah.
Where is that damn thing at? Yeah, I don't know where that is. Oh yeah, so it's a 4050. And that's saying it's 29 bucks. So what you need to really probably do, so if you just stuck the naked put on, casket put, whatever people want to call it, what was the impact for that?
It was like for me, it was like 56,000 or something like that, or was it 25,000? It was a lot. It was a lot. Well, we'll have to talk about that later, where I could pull it up. I don't have it open, but
when I take mine off, I'll kind of run it. But I have a feeling that portfolio margin's just messing me up compared to you.
Probably.
But
to
so
Sal, generally speaking, maintenance margin, how buying power works and the maintenance margin works on interactive brokers, they take 10% of the strike price plus the premium collected, and that is your maintenance margin impact. Generally speaking, sometimes some stocks take a little bit more. It just depends on the volatility of that stock, and they can change that at any time. Like AMC changed from when I first put that call on, for instance, to the second time I put the call on, it was vastly different. So it can change within the day. That's how, there is no fees for that.
no.
So for instance, if you had a $25,000 cash balance in interactive brokers, you'd have a IB gives you 4-to-1 buying power. So you have $100,000 buying power. Okay. So let's say you take $100 strike, a put, that would be $10,000, but they're only going to charge you 10% of that. So it's only cost you $1,000 plus whatever premium you collected for that put. So that maintenance margin impact would be, say, $1,100, and that would go against your buying power, your buying power. So you could imagine how much trouble you can get into. So because you're only, it only takes so much to put on 100 shares, because each contract's 100 shares. So you're committing essentially $10,000 to buy that stock, even though you only have $25,000 in cash, and it's only costing you $1,000 in impact, roughly. So
basically what we all do is we take the maintenance margin and then we divide it by our net lick, and that gives us our buying power percentage, how much we're using. If you're using like a Reg T, which is 4-to-1, then you want to try to stay 50% or below, generally speaking. If you're using portfolio margin, I try to stay honestly I honestly try to stay about 35%, even though it's kind of safer in a way, but because the impact is less, so 35% to me is kind of equal to maybe 40 to 45% or something on that on a Reg T. So right now I'm running at 35%, right on the dot pretty much. So, and that's with 100K worth of income ETFs in there, which will probably get dumped on Monday, or most of it will probably get dumped on Monday, free up a boatload more buying power so I can go back to doing what I was doing. So just wanted to try that, see if it worked though. Let us know if you have any more questions, Sal. Yeah, thanks for that video, James. We got invest to retire here. Yeah, I know he screwed around. He probably, screwed around with AMC. All goods got back from her walk. She pretty much just left us last night, said screw you all. So let's see. I sold 214 and 18 puts.
Is that on AMC? I think that was on AMC.
Probably AMC.
Yeah. You got $1 for all of them.
So I probably would have done. I'd have to look at a chart. I don't have a chart up, but because AMC is a legitimate company, right? I mean, they're not going bankrupt, even though there was a huge risk of that, last year or so. But it's not a GameStop, right? I mean, it's a legitimate company. You can go out there and drive by a theater, and they're still being revamped.
Wait. GameStop's a legitimate company. What are you talking about?
Yeah, I don't know. When's the last time you've seen one?
There's actually a couple right by my house.
A couple?
A couple. Well, I wouldn't say right by my house. There's one like a mile away and then one about 8 miles away. But there's a couple.
I don't really understand why that place still exists. Why wouldn't you just make it online? Right?
Well, they do deal in vintage and used stuff, so that's
okay. You put a request in with the website or GameStop website. Say, okay, I have an Atari for sale. I want this for it. And they said, this is what we're paying for Ataris, blah, blah, blah. Send it, okay, we're going to send you a box. You ship it back to us. And once it gets here, we'll test it out. Asteroids, blah, blah, blah. And we'll pay you.
I could definitely see GameStop going away for sure.
Yeah. Blockbuster, folks. Hollywood Video. The curtain area. The backroom curtain area. Porky's. Got $1 for all four. Yeah. I don't know. To me, it's like I looked at buying a put on it when it was up 130% one day, and I could have made money. We talked about it last week. Could have made money off of it and got out of it after 10 minutes. But to me, it's the $300 bill was better served somewhere else. Like, I'd rather have more guaranteed income than something's more of a gamble. Yours is a gamble, but yeah, took big sack for that. That's for sure. You did good DW, book great profit. Yeah. I don't know. Puckered sphincter.
70. It was only $77 in an hour. It worked, but yeah. Like I say, don't rely on that. Don't. I wouldn't. There's a lot of people that follow these meme stocks and that continue to go to the well that eventually get burned. So I'll mess with one every once in a blue moon, just to scratch that gamble itch. And you stay in it though. You stay going back to that well. You can get stuck into some crap.
I would definitely not side with Gerry here. Do not do it at all.
No, I'm not saying do it. I'm not saying do it at all.
Because and he said the key words there. I scratched an itch, right, to gamble. It's like I see too many people doing that. It's like, is it like crack? It's like a crack cocaine hit. Is that what it is? You know what I mean?
It probably is. I mean, I could have really, because there's people playing that stock that are doing crazier strike prices than I did. Obviously, yeah. Right? So
Wall Street bet people.
Yeah, what are they doing, right? So I don't know.
I would just say steer clear of it, or maybe go a little bit safer route than a naked call. Maybe define the risk. I don't know.
Yeah.
Good credit spread up there or something. Futures are down. I looked, they weren't very down. Yeah, well, come on, all good. It's flat. Down 19 these days is flat. Let's see here. Do you have plenty to find? Just need to run the scans. I don't know. Those scans can pop up a lot of crap. So, yeah, I don't know. Unless you got like a market cap minimum on it or something, of like 10 billion, 20 billion.
I don't know. I don't know about that. There's some small caps that I like that obviously that I still play, but there's definitely, it's hard when I run scans down there. There's a lot of freaking companies out there that are just,
That's what I'm talking about. If
what
you
the
want
hell
a
is this
scan
stuff?
set down that low, like 100 or like a billion and above, you're gonna get a lot of shit popping up with some okay stuff, right?
Yeah.
Versus
So
doing like 20 billion, most of it'll be okay,
when I
right?
run those, I look and I don't scan. I'm not looking for, what's good to be putting a put on. I'm looking for a company that I actually recognize.
Right.
And that's sometimes it's hard to do when you're running those scans. It's like, what the hell is that? And I kind of don't like to put puts on things that I have no idea what the hell it is.
That's true. But we did add a new one. I got EOG on there now. So let me see what did I get for EOG? So I got a 70 strike on him. It needs to make a 20% move in 40 days. 53 cents, put two of them on. So give me my normal $100 that I'd at least try to get. It's pretty safe. I mean, it's just another one of those oil companies. Honestly, it might even be better than XOP, but I don't know. We'll see. XOP is, that's an ETF though, right?
That's an ETF. Spread your risk out a little bit there.
Yeah, it's a little sketchy just the way it's been acting though. At least the way for me. I don't even know where the hell that XOP. Oh, right there. Had 55. Yeah, 255s, 65 strikes for 55 cents each. I already took those off for 51% gain. So we'll see. Ben, I saw you in the comments. Welcome for joining. If you have any questions, ask them here. But you can join the Discord too. It's free. We all hang out in there. A lot of us hang out in there. It's free. It doesn't cost you anything. We chat on Thursday nights too. So somebody put the Discord in there. I don't know if Thumper's here, if Matt's here or Allgood's here. Put the Discord in there. We got Mikaru. She's off work, I guess. I don't know. Tending to her cats. So welcome, Mikaru. We got Vic H here, which is schooling us last week on a bunch of shit.
Yeah.
So, see, I've cracked an egg open with a chick. Really? Were they farm eggs or were they like, what like commercial raised, right? Because the farm raised, I can see that happening. Oh, they go pick up an egg every day, and what if they missed one? What if there was like some, hay on it or whatever, and it sat there for 2 weeks or something like that, right? And the next day, the chick freaking moved the hay off of it, and you go in there to get the eggs, and you pick this one up, and there you go. There's a freaking chicken there, right?
I thought you were going to go for a joke there. Like, did you marry her?
I got dibs if it's hot.
I've cracked an egg open with a chick.
Horrifying. No shit. That scares the shit out of me that I'm going to see that. I would check them in the freaking light every time.
Candle the egg, yeah.
Candle the egg. Exactly. There you go. Or spin it and put your finger on there and let it go. And if it keeps spinning, then it's probably still good, right? That's how you can tell whether it's hard boiled or not. Let's see here. It's all protein. That's very true. The chicks are, I mean, that's like a delicacy in some places, bones and all that crap,
Well, in Philippines, they do duck eggs, partially.
I've had a duck egg before.
But
but
partially grown, the actual
fetus.
No,
that's a delicacy. Yeah. That's not on Dave's menu.
Crack it open and suck the head.
Ugh, that's disgusting.
They got to be very drunk when they do it, though.
Sake. Oh man, I lost my spot here. Let's see. I very seldom put another trade on the same expiry when I take it off. So what do you do then? So never mind. I know the solution. The solution is for me is I need to adjust my scanner. My scanner was only going out and finding stuff. If I did 45 days out, it obviously went out 60 days because the next one out there. Anyways, I know how to fix that. So that's my problem. I can watch the weekly, but not everything has weeklies anyway. But yeah, I can fix that. I'm just talking to myself apparently now. Sean Langan, he's new. I haven't seen this person.
Yeah.
100,000 even with options. What's the question there?
Not quite sure. Maybe we were talking about 4-to-1 buying power, but I don't know what the
Yeah.
question is though.
It's honestly with if you were doing equity, it would be the same. Although there's no maintenance margin, right? There is maintenance margin, but it affects it different. I don't know.
Yeah.
I've bought stock on margin before, but it would still be 4-to-1. But I don't think the maintenance margin matters, right? It gives you $400,000 in buying power. You can use it all. You don't want to probably do that though.
Probably not.
It's different. It affects it differently when you're doing equity, but invest to retire. Don't forget my screwing around with sandal. Yeah, I don't know about this colony crap, to be honest with you. Maybe can you talk about colony? Because you probably know more about it than I do.
Who, me?
Yeah, you don't have to, but talk about the $3 to $1 thing.
Essentially, what they're doing is buying stock. They're wheeling and doing PMCCs in low dollar amount stocks, low dollar denominated stocks. So $1, $2, $3 stocks. The idea is that they can collect enough premium to get the cost basis down to zero. And then when they sell in these contracts, that they're just going to collect income every week or month on it for free, essentially. But I just, they think that the premise is that this is less risky, right? Because you're playing with a $2 stock or a $3 stock. I beg to differ because, if you're dealing with a quality company that's selling for $50, $75 or whatever, and it falls, that's just the way it goes, right? You can double down. There's not more risk there. So if a $100 stock fell 20%, now you have an $80 stock. Well, the potential for a $3 stock to fall 100% is a lot bigger than a $100 stock falling to 80. It's
not to mention a lot of those smaller stocks are just crappy.
They're crap. They don't make any money. So they're just what they're trying to do is trying to beat the timing, right? So as long as they can collect enough premium fast enough to get their cost basis down to zero, then it's okay. But if that doesn't happen, then they're in trouble.
But honestly, so you do get the cost basis down to zero, you can still lose all that money.
Well, yeah. You're going to still, the likelihood of those $2 and $3 stocks going to kaput, complete bankruptcy, is exponentially higher than $100, PPP Procter and Gamble or whatever, like exponentially higher.
Right. So, and that's what we've been doing PMCCs on, by the way, is normally, the KMBs of the world, the Cloroxes of the world, solid companies that are not going to be going away anytime soon.
So it's essentially like they're kind of trying to run the PMCC where they're trying to reduce their cost basis down as far as they can. They're just doing it on essentially low quality companies that are cheap.
Right. So Colony, is that official? Is that an official strategy, or is that something they made up?
That's something that's made up.
Okay. We'll probably come up with a new one called Quality Colony or something like that. Quality Colony. There you go. That way we can differentiate between doing it on like KMB or something like that. Because essentially you do the same thing, KMB. There you go.
Yeah. I mean, it's just, it takes more capital. So
more capital, it's going to take longer to get it to a cost basis of zero.
Yeah.
Stock Ninja, evening. All good. No, I didn't lose. So I didn't. I lost power, Wi-Fi. Came back. Yeah. Well, I mean, you just left us. No, I'm just kidding. Yeah, I don't know. I don't know when you came back. I was gone. I was sleeping. Blame it on all good. There are three in my small town.
Oh, GameStop. I'm like, what? I was wondering. I thought we were talking colonies.
Seriously?
Like there's three
Three
colonies.
freaking GameStops?
They have a lot of stores.
Holy cow. No wonder they're going bankrupt.
Yeah.
Let's see here. Paps. Let's see. Perhaps a different question for another stream, but I watched Dave's latest portfolio update the other day and saw a lot of liquidation to buy Nusi. What is it? Well, actually, I don't know which video that was, but that was probably a really old video. Because Nusi I've had built out for quite a while, 111K or something in there. It's been at least like more than a month, 2 months maybe, I don't know. But I did sell, if you watch the latest video, I did sell a bunch of stuff the last month, so my last update, and put a bunch more stuff into Jeppy and Devo. So, yeah. So, what's your criteria for selling to buy Nusi? Yeah, no, that was an old video. A lot of the criteria was it's already a lot of the positions were covered in multiple ETFs already had. Like if I was in my dividend portfolio plus I had it in VYM, why do I need it in both? Right. So, not everything that's in my individual positions will stay. Will go. Some stuff will stay in there. But if I'm triple dipping, not just double dipping, I'm triple dipping. If it's in Devo and VYM and it's in my dividend portfolio, then it makes sense to get rid of it out of the dividend portfolio as an individual stock. So, anyways, I am trying to. It's kind of got it down to where I want it now. $200,000 individual stocks. I still could cut one or two out of there, I suppose, but Devo, I would love to get out of VYM or, kind of draw that down a little bit more and go into Devo, but just because they're going to run the cover call for me and there's some quality stocks in there. Now, granted, VYM has been great to me, but, the whole cover call thing against VYM just didn't work very well. And I've talked about that many a times. It's kind of a flawed strategy. I hope I answered your question. I'm following your trades on what is Sandal? What does they do?
Sundial. It's like a MJ play, I think.
Oh shit.
Yeah.
Yeah, drug manufacturers, Canada. Yeah, that's not in Dave's future. Let's see here. Is it those individual positions grew too large? Well, part of it. Some of them did. I wanted to extract some of the profits that I had in there and put it into something that's going to produce income for me. Devo is a good example because it'll produce income plus it'll have appreciation. And then some of the other ones are different strategies. I am going to retire next year, so it's a mental thing for me. That 3.5% is not enough to get me there. It's not mentally, it's not enough of income to get me there to feel like I have a warm and fuzzy. And even know if I go live in another country or not, it's just I'd rather have double that, right? And income ETFs can get me there. I can siphon those income ETFs income off down the road into more solid, probably like DGRO, SCHD, or something like that. More solid positions down the road when the income does not become God, what is wrong with me, Gerry? When the income does not present an issue for me anymore, I've aged a little bit more. I'm past, the portfolio has grown, whatever. I call it, the portfolio has become too big to fail. Then I can just kind of siphon those off, right? I don't have to. The whole portfolio is not going to be an income ETF. Okay, there's going to be a portion in there to provide the income that I need to feel like I have everything covered and can kind of live the way I want to live without having to worry about income. The options income completely separate from that, right? generating about $4,000 to $6,000 a month. I'll probably build that up though. So that'll just provide, as I like to call it, shitting out of Tesla anytime I want income, right? So that's what I call it. I want to buy a Tesla next year. There you go. Just work hard in that options income, and then buy a Tesla cash, which I won't probably ever do because I don't really want a Tesla. So, Gerry, it is 10% less the premium collected, not plus the premium collected.
Technically, well, I'm speaking in Interactive Brokers. It is 10% plus the premium collected for the margin impact. But I guess since you collect the premium, I guess it's offset by that. So it's probably just technicalities there.
Milk, caramel, caramel, potato. Or is it all the goal to get more income from Nusi while those positions were up? I'm probably going to be, so Nusi is kind of where I want it to be, and Nusi is kind of a crash protection ETF, although I don't necessarily like the way it's been performing as of late, but I'll be building out JEPI more. I'll be building out Devo more. And then when I retire, they'll roll the 401k off when they actually release that capital to me. It's a pretty substantial amount of money that's sitting in there that I really can't do anything with. It's just in a 401k. You can't do shit with it. So that'll get rolled and decide to go somewhere else. But QLD, I do have how many shares do I have QLD right now, Gerry? That was just a temporary thing I tried out. I got 1,500 shares of that, just kind of sitting in the options account. I'll probably get rid of most of that stuff on Monday, tomorrow. Do I answer this question? Goal to get to more income? No, I mean just in income in ETFs in general. So they give you credit for buying power, the premium collected.
It's kind of sort of what I said.
That makes sense. I'm working on updating my colony spreadsheet to get some actual numbers. Is that just a PMCC spreadsheet? Is it modified to say colony at the top?
Something like that. It's more like a wheel.
Oh, really? All right. Well,
but I don't know. Actually, I think Investor Retire is doing PMCCs. So I think he bought a Leap, and he's selling calls against it, if I recall correctly.
Leaps. Oh, okay. Well, I mean that's a PMCC.
Yeah.
Or a vertical spread, or vertical counter spread, or whatever.
Diagonal calendar.
Now we got a freaking another name for it.
Giraffe.
Your maintenance margin will go up as the stock drops toward your strike. Yes, absolutely. And the closer it gets to your expiry, man, it can probably balloon big time too.
If it's close there, yeah, it definitely.
Big gamma effect. So go ahead and take a look at Thumper's video he's put out on all the Greeks, by the way. Talked about all the Greeks. And just, we kind of talked about this last week as well, but we talked about all these strategies. A lot of strategies came up last week. These, ratios, reverse ratios, and all this freaking bullshit, freaking iron condors, spreads, butterflies, broken wing condor, broken wing butterflies, verticals, calendar, cockamanias, whatever. All they are at the end of the day is buy and put legs. That's all they are. They're just legs out there, and they make up different strategies, right? And they all kind of, if you think the stock is going to trade sideways, then there's a strategy for that. If you think the stock is going to go down just 2%, but could remain kind of flat, there's a strategy for that. If you think the stock is going to go down 20%, there's a strategy for that. There's a strategy for everything you could possibly think of. So all these strategies here, these fancy freaking names, are strategies for what you think the stock is going to do. But just because you don't know all those names or those strategies does not mean you can't be successful doing this, and you can't make any money doing this. Okay? All I'm really doing is mostly just naked puts. In general, 90% of what I'm doing is naked puts. That's it. Sometimes I throw a strangle on, and lately maybe I'll start throwing a spread down, not for protection though, right? I don't need that condom. I just need it to reduce my buying power, right? That's it. That's all I'm doing. 30 to 45 days out. Now, knowing some of those strategies could work in your benefit, but you don't need to learn them off the bat. Don't
Right.
concern yourself with learning all those complicated names and with got 10 freaking legs and shit in there, okay? Because you're just going to probably lose interest. It's going to be too much work. All right? Jay Lizard's a good example. I learned that one thanks to James. I've heard of the term, and I never really studied, didn't really care, but it's a valuable one to learn, I think, because that call side, that naked call up there can really burn you. So throwing that protection up there, we're gonna use that one for protection. We don't need the condom up there, but on the bottom side, I'm definitely, if you're doing Amazons and stuff like that. Anyways, that's my spiel. Just I kind of mentioned that last week when we were talking about all this stuff. It dawned on me after we were done with the stream, like people are gonna watch this and just get, think it's gonna be too overwhelming for them, right? Too many things to learn. All these Greeks out there. You don't really even need to learn the Greeks, honestly. Learn what delta is, theta, all that stuff's fancy. You can kind of learn it after, right? Just throw a new thing in every week or every month, whatever your learning capacity is. So, learn the basics, make some money, start making money, learn something new, right? Okay, what the hell is theta? All right, you know what I mean? Like, just take it slow, but you don't need to know all that stuff to make money. Anything you want to add there, Gerry?
No, like you said, I like the keep it simple, smarty method. Um, you know, get the basics down. I'm just now, honestly, learning about credit spreads and where they would be applied. So I've been doing this for almost a year now. I've been doing puts, and I'm just now learning credit spreads. So don't think you need to learn everything, because it gets freaking complicated like you wouldn't believe. And sometimes the simplest ways are still tried and true ways to make money. So don't feel pressured to get into all this complicated stuff.
The credit spreads, to kind of piggyback on what Gerry's talking about right here. The credit spreads, if you have a smaller account, that might be something you need to do. So you might have to learn those right off the get-go. So, Gerry and I, we've always been against credit spreads, just because normally traditionally how you put a credit spread on, it's not very wide usually, so you're just cutting into your income and you're not as safe, right? So how I've been using it, or me start using it, is just put where I want it to be anyway, and then buy something down even lower than that, right? That'll cut in the buying power, but it kind of acts, that's all I care about really, is cutting the buying power, right? I don't really care what the protection. 500 wide, I ain't gonna do anything for it.
Also, for me, it was like the I know we always talk about this, but the defined risk, right? It's like,
yeah,
I don't, there's okay, that's a $20 or $2 spread, and that's $200. That's the most you can lose. I'm like, I don't want to lose $200.
But if you put it in my terms, you'd be okay with it, right? Because it's not affecting you that way, right?
Exactly. As a strategy, it just doesn't feel right to me to think that I'm going into a trade thinking, okay, I can lose that.
Yeah, I agree. I mean, you can still roll it, folks. You can still roll it, just like
roll it.
But
I don't go.
Tasty work. Tasty Trades did a video on it, talking about doing a credit spread versus doing a naked put. They prefer to do the naked put because you're gonna make way more money. Now the ROR, or whatever, the return on capital, is going to be way higher with the credit spread. So it looks impressive, but I would rather be safer and make more. That's just the way I look at it. And what I mean by safer is the strike is safer. That's all. It's not that it's safer as far as like there's no protection there. You know what I mean? It's got a hole, a condom with a hole in it. Yeah, sold the AMC puts, 2 June 18s and 2 July 14s, 100 each. So yeah, sold the puts. Yeah, I don't know. I have to look at a chart on AMC, Jerry, see where that some biatch is.
Yeah, I think well under 20 is probably fine. Oh, my computer's spazzing.
Ugh, man, just earlier this year, that thing was like $1.60, right?
Yeah, I think under 10 actually is probably where.
Yeah, I would look out there, and I'd want to be. And 10, honestly, is probably okay, but it's still risky too. But and there's probably no premium down at 10 either.
No, there's not.
It's probably not something I'd touch. Victor, what's up, buddy?
Vic.
Sean, so this might go on with what he was talking about earlier here. On Tasty, we don't get 4-to-1 for options buying. Yeah, it's 2-to-1, I think. Buying. So when you said 25,000 to get 100,000 buying power, is that for options or stocks? It's for both. It acts differently if you're doing options though, because there's a percentage and then there's a maintenance margin, and then this acts differently. If you're doing common, you can buy $400,000 of common. I think you wouldn't probably want to do that, but in Tasty. James, you're using Tasty for the non-portfolio margin. Is it 2-to-1 in there? I think it's 2-to-1. You can put margin cap in the scans. Yeah, we've been doing that. That's the problem. I got 20 billion and above. That's why I don't get any shit popping up in there. Wish I could chat on Thursday Discord, but the time difference too hard. So bummed. Yeah, I get it. I don't know when you're available. We can always do like a pseudo chat too. It doesn't have to be on Thursday nights. Like we can just throw another one up. All you got to do is go in there and there's usually people in there, and just we go in there and we just all kind of like impromptu talk. You can run them just on SBA. I don't know. Let's see here. Wow, boy. Hey. Hey guys. Let's see, you followed on EO. Yes, I did. But yeah, I didn't do a strangle on it. But I do have, what do I have open on that thing? EOG. It's just a 70 put, 2 of them. 19% move it needs to make to go in the money. 9.7% probably in the money. Yeah, I don't do strangles and stuff like that usually. I usually do strangles on the big shit. The shit that ain't, Amazon. Is Amazon going to 4,000? Nah. It might, eventually, but not going to 4,000 in 40 days, in my opinion. I do have an NVIDIA on that's a butt pucker. Yeah, it's an 890. Granted, it had to make like a 30% move when I put it on to the upside, but that split news, man, that thing is looking parabolic, So I'm probably okay on it, honestly.
Probably. That's a huge company. It's got a freaking
26%
a lot of money to move that
to the upside in 40 days, 39 days by the time tomorrow happens. So probably okay on it. And honestly, you look at that thing, it was such a little bit of money. It was $100. You know what I mean? $100. It's like I'd rather just put a put on where I can make that $100 and not really have to worry about it at all. But I don't know. I do like having some of those naked puts on or naked calls on too. Just when we do have those down days, I can make money on those down days. But delta neutral. Let's see here. I did the 75 put in the 100 calls. Yeah, you're definitely not Dave safe.
Yeah.
He's a little bit more aggressive than I am.
Just a little.
Little bit. I'm at a 70. Ben R, so you guys ever set up your accounts to loan your shares? My account's set up for that now. The thing is I don't own any shares that anybody wants to borrow. So I was hoping that somebody would want to borrow QLD, Jeppy, and Nusi. But those are not like shortable crap that probably people short. I don't know. Art K, when I got assigned 200 shares of that, those got loaned out immediately. I was getting paid over 2%. That's great.
Did you get out of that?
Yeah, I'm out of it. Yeah. It was great though. They're paying me 2% to own yeah. Look, but I wish they're doing a QLD and Nusi and Jeppy, but
Yeah, I probably won't. I barely own any stock, so that doesn't apply to me.
and it's not turned on my Schwab account. But honestly, in the Schwab account, there's nothing in there that people will really want to borrow.
You did a video on that, didn't you?
I did, yeah. Those dividend stocks, nobody really wants to borrow those things. There's no big short. I mean, so RK is kind of one that would, right? But let's see here. I make sure I want to own the business before I get excited over the stock. I don't necessarily always follow those rules. If I know the business, that's good enough. I don't really care about whether I want to necessarily own it anymore. I know that's a good way to start people out. Like, you know what I mean? Procter and Gamble, like, you know, I mean, they make your tampons or what, I don't know what the heck they make, but they make toothpaste and shit like that. So you, that's a company, you know, right? Like you probably use a boatload of their products, right? So
Smith and Wesson.
Yeah, you gotta pay for your next, you know. But pins. I had to put on pins. I don't want to own pins. You know what I mean? So yeah, not everything. I don't follow that rule on everything. It's just not something I follow. I follow on whether I know the company, I've used it before, and whether or not I think they're okay long term or something like that. You know, Pinterest isn't going away anytime soon, although it's not a company or a business I want to own, really, right?
Same
But
thing
I
with Overstock.
What's that?
Same thing with me and Overstock. I've been playing Overstock puts for a while, and yeah, same thing. I don't want to freaking own that thing.
No, but you know, it is. It's a good way for people to start out, though. Sell puts on stuff that you don't mind own. You know, what you're learning. You know, but you can change that later on. Oh, we got Rebecca here. She's in a TQQQ at a 4750. So that's our very first options ever in her life. So 150 bucks or something like that. And she should be up in it by now, actually, believe it or not, because the market's been up. But for colonies, my goal is not to get the cost base to zero. It's actually to open a position, sell calls against if it goes up just enough, sell a position to revalue and move. Okay, so why won't you just do it on quality companies then? Quality colonies. Backtesting showed very promising results, but we'll see in a month or two. I hate backtesting, honestly. Honestly, I just don't like backtesting. That's me personally. If you had success doing it, then that's fine. But to me, it's like whatever's right of the screen hasn't been printed yet. It don't matter what's happened left of the screen. Where anybody can quarterback left of the screen. I can look at a chart and I can make you want to buy a stock, or I can make you want to sell a stock by quarterbacking what was already printed on the screen. But whatever is on the right of the screen, nobody knows until it prints to the left of the screen. Honestly, nothing really matters in the past. No, I mean, you know, it might give you a leg up, a slight leg up, but if it give, you know, in general, the market don't give a rat's ass. Like you get punched in the face, you lost your plan. Maybe it was Jeppy. Well, it depends on what video it was. If it was one today, then I sold a boatload of crap. I didn't get out of everything completely. I just took some profits in some stuff. I didn't get out of any positions actually at all. Gerry thought I got an MO though. Got Sam here. Dave, you got your ears lowered, haircut. My ears lowered. Yeah, I just trimmed it myself right before. You know, my bushy eyebrows. That means I'm getting close to 50 years old, apparently. So, because I mean, the lady I used to go to get my hair cut 6 years straight. You know, she's the only one that ever cut my hair, and you know, unfortunately, she probably got laid off. So I haven't even gone to check. But she used to trim my eyebrows out, you know, ear hair, which I don't even think I have. Not as much as Gerry yet, anyway. So, thanks for showing up, Sam. I want to know. I want to see more about your RV. Congratulations for getting back into the RV. definitely check her latest video out, folks. Let's see here. Should put her channel down there. Where's my mods at? Where's my mods at, Gerry? Yeah, here's her channel. Go ahead and take a look at Sam's channel right here. Where's your wife? She's a mod. I should make your wife a mod. She might abuse it. But see here, EKSO, still the only thing I buy religiously. Selling December puts. Anything else is big companies I use my discipline. Yeah, I'm very disciplined. I'd say I'm pretty darn disciplined when it comes to options. I don't really get that crack cocaine feeling that Gerry just told us about about an hour ago. To me, like, I like a regiment that makes money. It's been working, like even when we have those 5% down weeks, I'm, still okay, and, kind of cutting some things out that I feel are risk. I don't know. It's a process to me. Like, it's an SOP, standard operating procedure. If something changes, then I need to go adjust the standard operating procedure, the SOP, right? So that's just the way I operate, though. I don't know what EKSO is. You know what that one is, Gerry?
Yeah, it's some sort of medical device, exoskeleton medical device
Oh, yeah.
manufacturer.
It's got pretty good support at $5. It's a god dang. That's a pico cap. That thing is super small. 66 million.
They're in an odd town for something like that. They're in Richmond, California. A lot of people won't know Richmond, California. Dave probably does.
The Bay Area?
Yeah, it's like it's odd. It's an odd place for a company like that to be. I'll just say that.
Yeah, $66 million in there, in like one of the most expensive areas in the nation.
But
Seems
Richmond is very, 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 very ugly city.
like Berkeley.
It's like Oakland, but maybe just slightly better.
Is Bakersfield still the armpit of California? I've heard.
I'd rather be in Bakersfield than Oakland or Richmond.
Oh yeah, probably. Oh yeah, Oakland. Oakland's pretty tough. It's pretty tough. Before I forget anybody here, not everybody's gonna be interested, but if you are, I do post. I've been starting to post weekly. My weekly options recap for the week. So I show you all the positions I'm in. I show you the stuff I've taken profits in. I kind of talk about the thought process and all that stuff on my blog. It's a quick read, 5 minutes, it's done, right? And it has all my positions there. Has the account value, the account, the buying power usage and all that there. It's quicker than me putting a video out on it. So I've been posting it there. Feel free to take a look at it if you want. You don't have to. It's just a quick way to kind of get the latest information out on where I sit. So I put the link down there in the chat. I'll also put it down in the description, or maybe the first pinned comment after it's done. So like I said, if you want to check out my latest stuff, there you go. Obviously, I do post that in the Discord too, but it's normally just posting it in there, but I don't talk about all the kind of the thought process behind it. And by the way, the website is getting remodeled too. So in the next month or so, it should look more modern and up to date. Let's see here. Oh gosh, Sandal. Yeah, I agree. I probably wouldn't touch that thing. Hey, Wild Boy, if you're making money off of it, like, I'm not gonna shoot. It's just not my strategy. I'm not gonna touch it. But if he could be freaking, running circles around us, Gerry, everybody has different strategies, it doesn't mean it's wrong or right. It could just be wrong for you.
Exactly.
It could be right for them. So eBay just started a dividend. Maybe my long income growth hold. Did they start a dividend, Gerry?
Yeah, they did not too long ago. I like eBay. I think they shot themselves in the foot, getting rid of PayPal, obviously. But
God, it's tough.
yeah, geez, my son just sold some stuff. I used to be a big eBay guy back
Yeah.
10 years ago, and it was great. I thought it was awesome. But my son went and decided to sell something. We posted it and everything, and it was like the final sale price was like $700. Ended up costing him like $100 to sell this thing. I'm like, holy crap, eBay is making money hands over fist. I think they had to do that when they got rid of PayPal.
So my thoughts on eBay, because I've been using eBay since '98, and I remember using PayPal in 2000. Somebody said, "Oh, can you use PayPal?" I'm like, "The hell is this PayPal shit?" And in 2000,
Yeah.
and I remember, and I remember when they bought PayPal, they tried to kill PayPal, number one, with BidPay. They tried to start their own called BidPay. If anybody remembers that, that's like back in the early 2000s, right? And it just wasn't successful. Nobody wanted to use it. They all wanted to use PayPal. So that's when they bought PayPal, right? And then they split PayPal up again. And honestly, what they're doing now, they're not using PayPal now. They're using their own system.
Yeah.
But the shipping charges went through PayPal. When I had to, because I just sold an item on there recently, like 2 weeks ago. When I paid for the shipping of the item, that got paid through PayPal for some reason. I don't know why. And the final value fees ain't cheap anymore. They ain't cheap. It was like a $200+ item. It cost me $30. And I think that might have been, was that with the shipping too? They don't break the
they charge you they bundles together.
Yeah, so
With
you
the
can't really
shipping
know. You don't really even know what.
and
And
the
they
tax.
charge you tax now, by the way,
Yeah.
to buy. And I think if you sell a lot of stuff, they charge you tax. They issue like a 1099, I think, if you sell too much crap. So,
But I like
anyways,
eBay though.
I still like eBay. It's a great way to sell like items that are kind of unique, right? Where like Fuckbook won't have, like, is it Fuckbook? Facebook, where Facebook won't have like your local area is just not a wide enough area to get enough people to look at it. So, hey everybody, not actually working tonight, lurking from the couch. Couch potato ad rocks. Hey, glad you're off work. Let's see here. What do we got? Ben R, are you going to pull from your 401k before 59 to retire? No, I'm not. But when I retire next year, all that capital is going to get rolled out of 401k and go into my CR. The hell is it, Gerry? It's a solo 401k, but it's called a company retirement account. So a CRA. It's at Schwab. Because I have a legitimate business to fund it with, right? Like YouTube. Gerry, I just can't talk. YouTube is a legitimate business, so I can fund the solo 401k or keep it open with a legitimate business, even though I was using flip, housing flip money to keep the business alive. I actually own a couple of properties in the solo 401k, right? So all that capital will roll over into the solo 401k, and I have no plans of taking any capital out earlier than 59 and a half. I will try to Roth ladder, although I don't think it's still, if I Roth ladder right now, it's going to be a super high income bracket, right? So it makes sense to quit first before I do that. But at the same time, there's going to be too much money being made in those accounts that I'll never be able to Roth that out. Never. Not unless I want to take a major, obviously that money that you convert, it counts as ordinary income, I think. So if you convert $50,000 of ordinary income, then that just puts you up in more higher brackets. So you got to pay higher taxes on it. So I don't think I can Roth it out before I croak and die. Your take on the colony is very one-sided. You guys really should look over the whole concept. I haven't looked at it. Don't freaking shoot the middleman here. Gerry was talking about that. I don't know anything about the colony at all. And the thing is, I don't know if that's officially the name of the strategy or not.
It's
So
not. That's a made up thing. So I don't know. I mean, if it works for you, it works for you. It's not something I would do for sure, because I do not want to own crap companies. Period.
Wes, tell us the real name of it. If it's a PMCC or is it a vertical spread or a vertical counter spread or whatever, tell us the real name because I will look it up and I'll talk a little bit more intelligent about it. I don't know anything about it. I just heard it through the grapevine. That's it.
But I mean, if it's working for you, it's working for you. I'm not trashing it. It works for you, great. It's not going to work for me.
I don't. It's not something I would do this. I would do that strategy. It's just not on the shitty companies. That's all.
Yeah.
Simple as that. And I think you would do the same thing.
Mm-hmm.
We just wouldn't do it on $1 stock or $3 stock. But so Wes, tell us the name of the real name in the Urban Dictionary. Let's see. Want your pros and cons thoughts on the credit spread I was looking at this week on the big boys. Numbers are familiar. Yeah, sell 2,900, July 2nd Amazon put, buy the 2,800 or 20. Okay, so he's 100 wide. Gerry's waiting for me to talk.
You're the Amazon expert.
I'm not the spread expert though. I'm just looking at a chart.
Below there, he says it resulted in a $570 credit. Major support for Amazon has been $29.50 ish.
I think it's fine. For me, actually the 28's fine. I'm okay. Well, I use the 29 here. Sorry, the 29's fine. It's probably it wouldn't be what I would do, just because. But I think it's good. It's got support right at 29, going all the way back to September. You got a kind of a pop down there in March that tapped it, but he's got the 100 wide protection there. I don't know. So it costs what, $980. So he's going to make what, like $500 or something like that. Yeah, I don't know. See, I could go down lower than that, even lower than the 2,900, and go like a 500 wide and make more money than you and be safer. So it's so many different ways. There's so many options with options, Gerry. Like it wouldn't be the trade I would do, but I think it's pretty solid. I don't know how big your account is, and you could look at going to a 27 or a 25 out to July, like I did, out to July 16th, and then go like 500 wide and make the same amount of money, right? But you're still 400 points down from where you're at there. So I don't know. I think the 500 wide would be more maintenance margin though than what that 100 wide would be. So having some major support point. Yeah, I think it's a pretty solid play, honestly, but it wouldn't be one I would do. I say I would do it, but I wouldn't do it. That makes any sense. I'd be okay with doing it. I just wouldn't do it.
I got to start looking at these Amazons. I have nothing to say about Amazon because that's like big money. So maybe these spreads will get me into it.
The spread will get you in it. Spread again. I'm curious what the margin impact on that trade would be. Matter of fact, so let me pop that. I'll pop that trade up. Well, shit, I can't, Gerry, because I already have a bunch on. I'll probably screw the numbers. Yeah, I really can't throw it on, unfortunately. I already have too many Amazon things on right now. It just mess with the numbers. I would have thrown one on for you guys to show you what the impact would have been, but Gerry, I'm actually doing a hybrid with Sandal. I started the long calls and shorts against them while I sell puts to reduce cost bases. Yeah. For you, Gerry.
Sorry, I'm logging into iBroker to see if I can. So, Gerry, I'm actually doing a hybrid with Sandal. I started with long calls and shorts against them while I sell puts to reduce cost basis and more to get shares assigned. Yeah, I mean, it's a standard strategy. It's just I don't have an issue with it. I have an issue with the underlying. That's it.
Yeah.
I don't have an issue with the actual strategy of what you're doing. It's the underlying that I wouldn't want to. I don't want to own Sandal. That's. I mean, I don't.
Yeah,
The
I mean,
strategy probably is fine.
that's what people need to understand. Just because we wouldn't do the trade does not mean it's not good. It's just not good for Gerry. It's not good for me. And it's not even the strategy you're doing. It's the stock selection. It's the Mars. It's the Riots. It's the Neos. I'm not touching that crap. I don't want to touch that crap. Why would I need to touch that crap? I'm making good money now with solid companies, right? It's not the strategy that they're using that we're trashing. It's just the company, right? But if it works for you, you want that elevated sphincter effect, then by all means, go with it, right? We're not trashing that, right? So it's just everybody has a different way here. Now, there's strategies I'm not going to agree with, right? But that's fine. You don't have to agree with what I'm doing either, as far as the strategy wise. But a lot of times it just comes down to the stock selection is the reason why I wouldn't put that particular trade on. It's not the strategy.
Right. Exactly.
I'm sure that the PMCC worksheet would work, but yeah, yeah, I don't know what's in there. Did you guys share that out, or is it, did you put it in the resources area? We'll
Yeah,
pin
I
it
think
for you if
I
you want.
believe it's in there.
Okay. Put a version number on it too, invest to retire. You're kind of like a coder, so put a version number in there. That way, if you make changes to it, we know what version people are using. Definitely keeping it simple in the beginning. Yep, I think you're doing perfect there, Rebecca. Always stay Dave safe. And honestly, Dave safe is like a 0.10 delta now. So
Uh-oh.
I have to.
Moving on.
IV is so darn, the VIX is so darn low. What is the VIX right now? So let me see. VIX 1640. Yeah, VIX is too darn low. I had to get a little bit more aggressive. Yep, just roll it. All comes back. Hello, it's Nick from Florida. Hey, Nick, what's going on? We got Petey here. Petey. What have you been doing lately, Petey? You just doing cover calls, naked
Been,
puts? What have you been
been
doing?
playing a lot of TQQQ lately.
That's not
And
one I
testing.
play all the time because I usually wait for at least 500-point down days to put those on. Um, I don't think I have any TQQs on right now. I don't think. If I do, they're not very long dated. Shit. The hell is it? Here we go. Yeah, no naked calls for me anymore. Screw that. um, I think it's the responsible thing to do, Stock Ninja. I know you got broku'd really bad, but I think it's the right thing to do. Be super safe with them. Jay Lizard them if you have to. But to try to lower that, become more delta neutral, right? Because if the market's going down that week or that day, there you go. You're printing that day. You're not going to be affected that bad, right? I don't know. I think it's a smart thing to do. Have some on. Just be super careful with them. Stock selection and your stock, like I said, Jay Lizard if you need to. I love saying Jay Lizard. Let's see here. I was trying to sell a put on Hylion at a 550 strike, super safe. It won't fill. I don't know shit about Hylion. I think Nicola is kicking their ass anyway.
That's
Let's see.
what's funny about the whole thing is Nicola was the one that was supposed to be a fraud or whatever, but it's been kicking its ass as far as stock price and performance.
I wouldn't do a put on that. That's just me. I'd be out of those things. And I mean, I don't know. Why even mess with them? You know what I mean? Why do you need to mess with those? Right? I don't know. I'm over that game in my life, I think. The whole conviction behind like, oh, I'm so behind this company. It's gonna eat, it's gonna rival Tesla. I don't want to wait 10 years for it to happen. I look at opportunity cost. I want to make money now. And I want it to be safe as it possible. Right? I don't know. It's not a SPAC anymore, so I guess it's got that going for it. And just to go back to Hyliion and Nikola, by the way, I would love for both those companies to succeed. Okay, I want to see Neo succeed as well because we need rivals to Tesla as well, and not just freaking GM and Ford, which will be around with EVs, by the way. So the more companies and more options we have out there, Hyliion's hybrid solution, whatever the hell they do, we got the hydrogen Nikola option, right? I think that's better for everybody in this country or the world. You know, it's going to lower prices. It gives us more options, more flexibility. Because I'm not looking forward to just driving around an EV. To be honest with you. Strangles around earnings are good way to stuff. Yeah, I mean, wouldn't be what I would do. Straddle maybe, but then again, straddles. There's risk with a straddle too. I don't know. So you know what my play is around earnings, and honestly, I do look at earnings, but it's not as big effect right now because I'll have something that expires past earnings if it's like a week after because I plan on getting out of it before anyway. But the plan for me with earnings is just get into this shit that tanks. If it's a good company that I like and I'll trade anyway, and it takes 10% on earnings, there you go, right? But if you're already in the options, then you have to deal with trying to repair the damn trade, right? Now, obviously, if you're in a strangle, one side would print and one side wouldn't, but I mean, I'd rather just pick up the contracts when it tanks, right? That's just the way I like to play earnings, though. What about you, Gerry? What do you do there?
Yeah, I do the same thing. Like you, I'll sometimes have trades on through earnings, but I do plan to take them off. And a lot of times I'll take them off. I actually last week, well, no, that was the week before. I took one off, took a small loss on it because earnings was coming up. Didn't want to play earnings, right? So usually by the time earnings coming around, typically stocks kind of run up and you're able to move out of the position and get out of earnings way. But that didn't happen this time. So I took a small loss, got out of the position. Earnings came, stock tanked, and I don't think I even got back into it. I probably didn't. But yeah, I'd rather look and see, okay, I know this happened. Now we can play it. Instead of I'm going to guess at what happens and play both sides, and then one's going to be screwed and one's going to be okay. I'd rather just know for a fact, okay, earnings got jacked. We're down 10%. Now we can figure out where we need to go from here.
Yeah, you make more money too.
Yeah.
Get wider and make more money. But I mean, so the risk to doing that particular plan or strategy, right? We're going or waiting for it to drop and then get into it is Zoom is a good example. That thing tanked to 310 after hours. And guess what? It fought its way all the way north before after hours closed, right? It literally fought its way back all the way to being even, slightly up maybe. And then the next day just went up. So that is a risk there where you're not going to, normally, honestly, how I've played earnings in the past is I'll buy 5 shares or something like that after hours, and then catch the 310 or somewhere around there. And then it pops up and then I sell it. I don't even play options because you can't play them after hours. But, so that's just the way I've been playing earnings. It's been a while since I've done that, but day printing. Yeah, take a look at my website if you want my latest positions, a recap of the week, and then normally I do a recap of the month. And like I said, I'm open to ideas there too. If you want to see more information or whatever, I can share that too. But it's kind of a good way just to go. It like takes you 5 minutes to look at it, even probably less than that. I'm a very slow reader. So are you guys going to tell everybody we're official now? I don't know. Don't throw rice in my eye. What's this? Oh, eyeballs. It looked like two dots over here.
Could be switches.
Yeah. Oh shit. Let's see. What do we got here? Hit the like button, peeps. Good discussion. Thanks. I'm glad I stumbled on your channel today. Good night. Hey, take care, Ben. Glad he has some questions in the video that I put out yesterday. So that's kind of cool. Hopefully he joins the Discord too. It's free. Doesn't cost you anything. Like I said, if you want to join the Discord, it doesn't cost you anything. Check it out. You can always, leave the Discord if you don't like it, right? I get to add 1,200 more to my Roth this year and have 20 years left. Any new position ideas? 20 years left. Wow. QQQQ? M?
That's what I was going to say.
QQ, that's in my schoolie fund, by the way. It's in my schoolie fund. My M1 account, I have a schoolie fund. QQQM is in there.
It's in my
I would
M1
definitely
too, so
have a pretty substantial amount of money that I would be invested in there, and probably QQQM. Most of it if I had a Roth, which I don't have, but if I was 20 years left and I had a Roth, I'd probably dump it all in QQQM for many years. That's probably what I would do. Mookie did have a point the other night that that he thinks. Now, granted, this is take it with a grain of salt because he was basing it off of like 2000 to 2010, which was a lost decade, right? So, and Matt can probably talk about this too, but it underperformed, right, compared to SPY, I think. But the point is that Matt brought up, and exactly, he's basically talking right out of my head, is technology wise back then it was way different than it is now, right? There was a lot of .com crap back then that went .gone, right? I remember it. I worked that night of 1999 turning into 2000, right? I was on call and all that crap because of the Y2K thing, right? We thought the world was going to crash because of Y2K, right? We didn't have the 4 digits. We only had 2 digits. We didn't know what computers were going to do. So a lot of companies went away, right? And it was a lot of companies were way ahead of their time back then too. Webvan, trying to deliver groceries. Now it's common, right? 20 years later, now you can get your groceries delivered, right? But back then it was like a novel idea, So things have changed since then. This world now is way more technology driven than it was back then. Way more. So you really can't use that as a benchmark anymore, right? I would almost use 2010 to 2020 as an example. I think we're going to get more technology based than we are even today. There you go. Yeah. So I just don't agree with Mookie on that one. Mookie Finance. He's got a YouTube channel, by the way. So QQQQM. There you go. That's what I would probably do. Elevated speaker effect. Yes. It's a new Davism. Hey, Damien, what's going on? Let's see here. Oh, we got Investing Sensei. Investing Sensei, is he still here? I don't know. We need to get Investing Sensei on. Yeah. He doesn't have to be on tonight, but maybe in the future. I want to know more about, because I've brought him up a couple of times on the live streams. He's, he was wheeling, okay? And I talk about this every week, basically. You wheel crappy stocks or just substandard stocks like NEO, for example, then you get stuck when they go down. You can't wheel anymore, and you're just down. You're down 20%. What are you going to do? You put more money into them, take the loss, or go out long-dated leaps or something like that, right, to make some cover call income. But I would like to hear it from the horse's mouth, right? See, started posting my trades, expecting feedback, but was disappointed. What's that? Talking about the Discord? What are you talking about, Damien? Yeah, I don't see any positions you posted in here. I'll try to get to them if you want to post it in here, but I don't know where it is in the Discord if you posted it in there, or if you did, if that's what you're talking about. Let's see, who will? I don't know. Yeah, I don't know. Are those soccer players? No.
I think they're tetherball.
What's tonight? Yeah. Is it free? I'll watch it if it's free. I ain't paying for it. I got a BitTorrent. What do I got to do to get it, Cody? Colony is my strategy. I called it my colony. Hooterville is my small one. Plan is with 3 to 9 stocks, as it notes in Discord. Outperforms holding larger stocks by an immense difference and is safer. I can see it outperforming, but I don't know how it's safer. So I can see it outperforming because it's probably more premium in those shit stocks, right?
Yeah.
But I don't know how it's safer. I don't understand that part of it. Tell us how it's safer, Wes.
I did like Green Acres.
Green Acres and Ham?
You watch Green Acres. That's your generation too.
Green Acres and Ham. Little House on the Prairie. What? Green Acres? I don't know. Love Boat? What do you mean Green Acres? Where did that come into it?
That's Hooterville.
Oh, that's Hooterville? Oh.
Dang, Dave.
You know what I thought when I saw Hooterville? I thought about Hooters and saw Hooter. You know me. Come on. Come on, Cletus. Oh, man. I don't think I'm day safe at the moment. If you're around 0.10, well, I take that back because there's some stuff I'm like even higher than that.
He's got some examples down below there, Dave.
All right, let me scroll down here. Sold put 175 on Baidu June 2nd for $2. So 172.50 on Baidu. I like the ticker. Baidu. Let's see here. 172.
That's not bad.
It's not, definitely not. It's way, way more aggressive than I would want to be, but I like the ticker. You know, it's probably like my second favorite Chinese stock after Baba. But the 172 is super aggressive to me. But I think it might be okay. When does it expire? July 2nd or June? Wait.
No, he sold it on June 2nd.
Oh, yeah. When does it expire, Damien?
July 2nd.
July 2nd. Okay, so 30 days out. Probably be okay. Let's see. Let me look at that one. Options.
It's not bad. Right now it says it's got a 90% profit probability.
I was just looking at that. Okay, so it's like a 0.10 or something like that.
Yeah, 0.11.
Or it's delta. Okay. Yeah, I mean, it wouldn't be, it's more aggressive than what I would do on that stock. Now, on some other stocks, that 10 gets me where I want to be. But I think it's pretty good, you know. So it's pretty good. It's just a little bit more aggressive than I would be on that particular ticker. But I like the ticker. Yeah, $2. So the thing is, you could probably go down and get $100 for lower than that, and for like a 0.5 delta. You know what I mean? It's that's tough. Some people that doesn't wet their whistle. You know what I mean?
Yeah.
Like, you mean selling? It doesn't wet their whistle. It doesn't wet their whistle.
Yeah. You mean selling 2 down lower?
No, selling one down lower, like a 0.5 delta or something like, or 0.05 delta, for $100 or something like that, right?
Gotcha.
Yeah, I don't know. Like I said, it's okay. I like the ticker. It's a little bit more aggressive than I would probably do, but I think it's pretty good too.
Well, it looks like you're up on it 30% or so. So that's good.
Already?
Yeah.
Yeah. Actually, so he put it on, what day did he put it on?
June 2nd.
So he put it on Friday. Yeah. So it did have a little bit of a pop on Friday, but the 2 days prior to that, it gapped down. Yeah. A little bit of market pressure, it'll definitely go down, and it's just, I don't know. It's obviously a little bit riskier just because of China too, but yeah, I hope I pretty much, I don't know if I answered this question or not. I'm on the fence. I think it's a good ticker. Some more aggressive than what I would do. He even said it's not Dave safe, but it's not bad though. It's
No, it's
just
not. I
on a .1 delta on Baidu, it doesn't get me where I want to be on that stock. So I would be okay with making $100 going down lower, but maybe he's not. Hydrogen engineering caused the cost to produce it. Yeah, I like different solutions, not just EV. EV is not cheap to produce. It's not clean to produce EV.
yeah, it's dirty.
Exactly. Especially if it's not, of course, I don't know. Our nuclear plants, they're pretty clean, but there's still waste, right? There's water that's contaminated. There's rods that are contaminated that they bury in Nevada, which is the reason I probably never live in Nevada. It's like, what do you do with all that junk?
Yeah, what are we gonna do with electric vehicle parts that are
Batteries,
crap?
yeah, lithium batteries. Um, I'm gonna do options on SoFi stock now. What do you think of that, Jerry?
I like SoFi. I
Yeah.
think though they could be because they're big into student loans. I think, right?
Yeah. Yeah.
I don't know. I think they
Not
can get.
just
I think they
well,
can get their
Ernest is
ass handed
too,
to
so
them.
it's not just SoFi, but what?
I think they can get their ass handed to them by Hot Lips somehow.
I had to think for a minute. Who the hell is he talking about? Let's see here. What is it? Just SoFi? Is that the ticker?
Yeah.
I thought weren't they a SPAC recently?
Yes.
Okay. Um,
I like the company though. I mean,
I do too. It's just probably one I would touch.
they do have some
Why do I
juicy
need to touch?
premium.
That's the way I look at it, right? Why do I need to touch any of that junk, right?
It's better than some of
Mara,
the other the
Riot,
Maras and the Riots and the Sandals and the all that stuff.
yeah. If I can meet my 2% a month without that crap, why do I need that crap, right? I don't know. SoFi stonk, sold some CCs. Face can contaminate my water. Face can, Dave can. I am Hot Lips Jerry. Also sold 3 puts on Intel C at 56.50.
That's
Yeah,
a little Dave safe right there.
I know yeah, I know you like Intel. I do. Um, but when I look at the premium where I want to be on it, there's nothing there.
Yeah.
Um,
I put on a couple on Intel. I think
54 is decent, but 52 is ideally, but there's probably nothing there.
yeah,
54, 55 is probably okay, but so 56.50 is pretty aggressive.
it is. I went to the 5250s for July 16th. I think I got 55 cents for each of those.
Now, I mean, if he wants to own it, that's a different story, right?
Right.
Yeah, if he
Yeah,
wants
I
to,
think it's a decent price too. Anyway.
I think it's fine too. Like it's not a stock that's going to go anywhere. Matter of fact, it's going to be going up over time. Probably close that 62 gap at some point, but yeah, that's definitely way more great. I mean, that's like a buy right. Not even a buy right. That's just like literally right. Yeah, he doesn't mind owning it. Yeah, and then you can just turn around and wheel it, I suppose.
I think
That's
it's a
kind
go
of what
kid.
we've been talking about. If you're going to buy right or versus doing a wheel, if you're going to do a wheel, then you just kind of do almost right at the monies,
Yeah.
and then it goes up and you just, oh, well, let me just do a whole nother set, but you're okay with owning it. 74 cents.
Yeah. So, if you got to sign that, your cost basis would be what, 55,
56.50.
75, something like that?
Yeah, 55. 55.25.
55.76.
55.76. Yeah. And then you can just, turn around and sell some cover calls or opening up
Yep.
another set of puts, average down if you got, yeah, I don't know. That was my plan with RK. if it continued to drop anyway. But yeah, so he doesn't mind owning it. Where's everybody? Nobody's asked a question anymore. They all dropped off.
They all dropped off. How many
What
people we
time's
got
that fight?
online now?
Freaking Cody comes in here and posts the fight, and everybody leaves. What channel is the fight on, Cody, if you're still here? Is it free? Can I watch it? Or, I mean, I got Sling. I'm not paying for shit. So, all right. Well, we'll give it, let's see. I don't mind here for you. Yeah, you are here. You're the only one here. No, I've showed 40-something people in here. I don't know where there's no questions. Ask us a question or bring up a topic. I think Wes took off. I wanted to hear about how it's safer. I want to know how a colony is safer on a $3 stock. We got Rebecca. Are you working tonight, Rebecca? Yeah. Still crying after sandal discussion. What did we say? What did you say?
We said it was a crap
What did you
stock.
say, Gerry? What?
We said it's a crap stock.
Strategy's fine. Stock sucks.
Yeah.
I just what I don't understand, and I want to. I mean, is the premium that rich on those stocks? Is it really that good? Right?
From what I saw, you got to really ramp up the contracts, and so maybe you got 50 contracts, right, that you're collecting 10 cents a piece on, versus us doing 1 or 2 contracts of some XYZ company. So
I just want to know, because when I look at those stocks, I'm like, there's no premium where I would want to be on the stock. And that's partly because it's probably not in a 0.10 delta, right? Like it's way below that because I'm looking at a chart. But so I'm wondering, what's a 10 delta on those?
there is no on those kind of things. There is none. You go at the money on both sides. There's no getting safe on it.
Your investor retire, you go at the money in anything quality, you're going to make a boatload of money too. Probably make a lot more money on a quality stock going at the money with less contracts.
Because if you think about it, Sandal it's what, $1.10 or something. Where are you going to go from there? You got to sell dollar strikes. No, there's no 5-cent strikes there. You're just you got to sell the dollar, or you got to sell the $1.50.
50-cent strike maybe, but I mean, yeah, I want to know, why, what is it about those stocks, right? And they might say high AV, but I don't know. She's got Sunday nights off. Yeah, probably it's getting close to your bedtime though. I can tell you that. Let's see, John Arnold. Thanks for the stream, guys. Lots of good info. Hey, thanks for that, John. Got the options account to 100K ready to play with y'all. You don't need 100K to play with us.
Mm-mm.
You need an options account. That's it. Preferably more than 25K, but yeah, 100K, you're set to go. You're good to go. Gerry, what is your account balance?
Now it's we just got a big deposit put in. So I'm now right at about 77, I believe.
So what are you going to do with all that extra buying power?
I don't know, because I'm sitting here, I'm at 25% buying power usage, and I'm like, damn, I got to put some stuff on, and it's kind of stressful.
Yeah. Well, you imagine having $1 million account with portfolio margin?
I couldn't do it. I don't think I could do it.
That's what I'm saying. Like, this does not scale very well, in my opinion.
Mm-mm.
I don't know of anybody yet. Nobody's ever come forward that has $1 million account. I'm talking about $1 million cash in there with portfolio margin turned on. Right? So that's like $6.7 million, right? I don't know of anybody that's doing it. You don't technically need that. Like, I have no plans of building my account beyond probably like $400,000 or $500,000, honestly. And, I mean, I would probably scale up a little bit, but at the same time, I'd probably just get safer and generate 10 grand a month or something like that or whatever, being safer. I don't know. I don't really know I would never scale it up though, like how I'm doing now. Why would I scale it up to
Right.
be 1-to-1? You know what I mean? Doesn't
Right.
make any sense. One way to look at it, one way to look at why it seems safer is because it can't move down by $1, thus reducing your loss if you have a position. It can't move down by $1. How can a $3 stock not move down by $1? It's more likely to move down by $1 because the dollar on a bigger stock is not going to affect you as much, but a dollar on a smaller stock will affect you big time. I don't know. I need to understand what he means by that.
Maybe they're saying that the lower price stocks, say Sandal, right? It's $1.09. What would happen if it moved down 10%? Would those 5-cent contracts still be 5 cents? I think that's kind of where they're going with it.
Yeah, but they're stuck in those contracts. They can't even close them out.
They don't want to close them out. They'll just go ahead and get assigned. It's a
Oh,
wheel.
it's a wheel. I need to understand. I need to look up the strategy. I need to find the real name of it first. I guess it's called the wheel. It's how they're doing it. It's the stock selection. That's what makes it interesting.
Right.
What's your percentage gain that you sell at with any individual stock? At what point do you take money off the table and buy into JetB for a whole in position? This has nothing to do with options, does it?
Well, Jeppy and Nusi is option funds.
Well, the first question right there, the first question, the first part of this, it could be talking
gotcha.
about individual stocks and not even options. I don't know.
Gotcha. No, he's talking about, I don't know, she, sorry. They're talking about your individual portfolio.
Yeah. If you're not talking about options here, then it has nothing to do with gains, percentage gain, or anything like that. It has to be rebalancing and keeping my sectors aligned with where the S&P 500's at. If something gets too far out of whack, then I bring it back into whack. Like energy, for example, went on a run. Industrials went on a run. I brought those back into whack, right? So I bought, instead of I sold those, took some profits in those. I actually put it in the income funds because that's what I want to do right now because I need to build those up so I can get a warm and fuzzy when I retire. The dividend portfolio, individual stocks, 3.5% if you're lucky. With the K was like 8-9%, but I mean that's just not a lot of money. It takes like $2 million to be able to live off that, right? Because you got to think a lot of that money is in retirement account. You can't access it, right? Roth laddered out, wait 5 years. I mean, it takes a long time. So for me, the income funds, $400,000 or $500,000 in those, plus individual stocks, plus whatever else, options account will be absolutely enough for me to live off of, plus have extra to put into more solid positions than Jeppy and Nusi, and I can kind of trim those out down the road because they're risky too. But I hope that answers the question. Mikaru, still here. What is the key to making money on options? The right stock, buy-in power. I am thinking I need margin, and it's not hard to grow. You don't need margin to do this. It will make it easier, especially if it settles right away, right? You kind of want something to settle right away. So you need a margin account for that, Gerry? A cash account wouldn't.
You do need margin. Yeah. You do need a margin account. You don't need margin.
You don't need to use margin when you need margin account, which is 25K, right?
Right. Well, no, 25K is just to avoid the pattern day trader rule. You want the margin account so that when you settle a trade, you go ahead and use that money right away. Otherwise, without it, you'll have to wait till funds settle.
And this is where I always get confused because no account that I've ever had below 25K was a margin account to me. So I don't know. I get confused there. It's a Reg T account, but I don't know of any account that's less than 25 grand that'll let you day trade in it.
No,
So
you
to me,
can't.
it's a margin account. You need a margin account, 25 grand. But maybe it's different with options. I mean, I don't know, because I'm speaking specifically to stocks, but you don't need margin to do it. So you can just get away with a cash account. The right stock. Yeah, of course, the right stocks matters. You know, the key to making money is just being patient, being smart on your strikes, right stocks, and then being patient, waiting for the time decay, you know, or wait. Yeah, I don't know. That's it basically. You're putting all the advantage into your side, right? You're putting all of the pros on your side, right? Timing you don't got to worry about. You don't got to worry about the stock direction. You don't got to worry about the stock, right? So this might be the time to start being safer, as there is a lot of pullback crash talk out there. My 2 cents on what that means is it means the market's going higher. Anytime there's talk out there that there's crash or a pullback, that means it's going higher.
That means sentiment is up, actually.
It
Well,
just
no,
means
it
that we're
means
not going to
that,
have it.
yeah.
Because it's funny how that works, but that's just how it works, right? When people all want to get into the market, everybody just can't, find enough money to put in the market. That's when you're due for a crash. It's the exact opposite of what you think. The crypto, for example, right? Everybody and their mother start asking and talking and, selling their freaking kidney to buy crypto in what, 2018 was it? 2017? And then when everybody and their mother's talking about it, people that don't know about investing, never invested in their life, that's when you're due for a crash. There's a bubble. That means it's a bubble. So that when I see this here, when a lot of people talk about pullback and crash, that means the market's going higher. That's just what I think. Obviously, that's the reason why I have a market, because Gerry might think the opposite, right? Or Damien thinks the opposite. That's how we have a market in the first place. I was using 30K before, and it was tough. It was tough. Yeah, it would be done. Obviously, the more the better. Yeah. But if you're just starting out, 30K is plenty. Get your feet wet. Get your wet your whistle. Gerry, you are right that you are really. Let me see. Gerry, you are right that you really need high contract sizes for calling strategy to work. That's scary in itself.
He keeps going.
Does it? But as the cost of the stock goes up, your contract size can go down since the premium is higher. Sandal is already sitting at $1.09. You got it, Gerry. Stop reading my mind. What is it? What'd you get?
That it's sitting at 109 now. How much further can it go?
Go to zero.
It can go to zero. Yeah, that's kind of the point that we got. But if you don't think it's going to go to zero, then there's not much that it can do there. That's the thought.
God, none of us ever get in a stock thinking it's going to go to zero.
Right.
None of us get in a stock thinking it's going to drop. None of us get in a stock thinking it's going to drop 10% or 50%, right? We'll have a plan until we get punched in the face, I suppose. So it can go to zero. Then what happens, right? You have 50 contracts. Please tell me you do 50 contracts on it. 50 contracts, right? How much money is that?
It's like 10 cents a contract, so $500.
So if it went to zero, you only lose $500.
I think that's true, right? Because it went to zero. How can you fulfill on? Yeah.
Yeah, you can't get put the shares.
Can't get put the shares. How does that work? Well, no, because you'd have to buy them, right? Because someone's bought the contract.
So if you had to buy those, that's more than $500.
Right.
Times 100, right?
Exactly.
So that's a bigger loss than $500. Is that 5,000 or 50,000? So come on, investor retire. You here? 10 contracts. If you got to sign, how much money is it? Dave, do you go for anything higher than 10 delta? Yes, I do. I do 10 beyond 10 deltas on like ETFs and stuff. I got a QQQ on at 15. That's probably in the money, by the way. It's probably higher delta than that, actually. I got a 17. Got a 17 delta on RK. Sorry, that's probably in the money. Darn it. I don't have a. You know what? I might modify the spreadsheet, put delta in there too. Then that'll make sense. So yeah, on ETFs and stuff, I'll do it. The idea. Let's see here. The idea that I have to sell weekly contracts at high volume, 100 contracts at 5 cents is 500 a week. At current price, it requires 10,000 capital, which is 5. So is that maintenance margin, or is that actually just like full amount, full capital expanded?
That's full amount.
Okay, which is 4.58 return in a week without leverage. Let me do some math here. So 100 contracts times 0.05 times 100. That's only $500. What's the stock worth, Gerry?
$1.09. So if it's $1 put, you're going to need $10,000 to buy.
So you can lose
fulfill
10
the
grand.
contract.
So you can lose 10 grand, basically, is what he's saying.
If it went to zero, yes.
Which it's a high likelihood that it could, right?
The likelihood of SNDL going to zero is exponentially higher than, say, a Coca-Cola.
Right. So you're going to make a boatload of money, but there's a big risk there, or a bigger, way bigger risk, right? Now, granted, if Procter and Gamble goes down 20%, all right, okay, maybe you're going to be down, but you're going to make your money back. It's not going to go down to zero. It's not going to go bankrupt. So I understand here. That's a lot of money to be making right there too. It's a shitload of contracts though. That's not cheap in it's not cheap in commissions. Is that minus commissions, invest to retire?
No, I don't think so. Well, the 4.5 it might be.
Because on a stock like that,
not.
IB might charge more than $1.
Yeah, that would suck.
So what do you do if Sandal drops to 50 cents then?
They might be doing this in Robinhood, getting that free commissions.
Yeah, Robinhood would be a good place to do it on.
Mm-hmm.
So what do you do if it drops 50 cents? So they're turning around selling covered calls against it, or what?
Yeah.
Let's see, we got West down here. Safer because I only have a super small account of capital split between 6 smaller stocks. Pays amazing compared to having to tie up same capital with larger stocks that you may think are great stocks. See, what I would want to see here is I want to see this compared to credit spreads, because not that I ever do those, but somebody that does credit spreads, like Invest to Retire is a good example. So Invest to Retire used to do a bunch of credit spreads. That was like his bread and butter, some sliced bread or whatever. But did he abandon that and go to the colony now? Right? I still have a hard time I have a hard time understanding how it's safer just because it's a smaller account.
Yeah, I don't see it being safer because you're playing in riskier stocks. So you're not. Yes, the return on capital
money you have, right?
Yeah. The return on capital used is probably a lot better than what we're doing. But the risk on capital is probably a lot higher than what we're doing too.
Yeah. 6 smaller stocks. Yeah, I'm still lost a little bit on it. I kind of need to know the difference between somebody just doing a credit spread on safer stocks. Now, granted, it's not a wheel. So the wheel, you're going to make a boatload of money, assuming the stock stays right where it is or goes up a little bit, right? But if the stock goes down, you're screwed,
Yeah.
right? So this strategy right here might be better than doing a wheel on a bigger stock, right? Because this couldn't drop down as much. So, like, I'm just going to use Investing Sensei as an example, right? He was in Neo, and I don't honestly, I'd have to go back and look at his videos, but so he was in Neo, and that shit dropped like 20% or whatever, and so he can't make any money on it. So the question is, if you're doing the colony and the stock drops 20%, can you still make money doing it? If you can, then that's a leg up on doing a wheel on a Neo in a way, right?
Yeah, I think that's a better analogy because you're comparing the crappy expensive stock to the lower priced one. So it's kind of like, do you want to be in the crappy expensive stock or you know the
So
comparable cheap
you're
stock?
calling Neo a crappy expensive stock?
Well, that's kind of, I mean, that's what we're talking about, right? I mean, you
Right.
got the risk of Neo, which is a higher price stock when it was sitting at like 60 something dollars, and versus whatever stocks that they're running over here at $1 to $2 to $3 or whatever it might be. So it's kind of like, you know what I mean?
Two crappy scenarios. There's less for, you know, less for a dollar stock to drop, but percentage wise, it can still drop 50%. So the question is whether or not you can still make money if it drops 50%. That's the question. That's what we need to know. Because if you still can make money on a cover call, but drops 50%, then that would be the way to go versus doing a Neo, if you're doing
Right.
a wheel anyway. Or any of the scenarios. I hope that makes sense. Oh, maybe there's some comments you say. But since Tasty RIB offers leverage, that is either 5K or 2K investment, which was crazy high returns. You don't know. I want to know if he's still doing credit spreads or he's abandoned that. But if those great stocks drop at all, you sit till they come back. My little guys keep paying and zero stress. So I need him to answer the question we just asked basically then, because I'm not wheeling expensive stocks. I wouldn't wheel expensive stocks. It's just not me. Because for the exact same reason, if the stock drops, you're screwed. You either buy more, you average down, you take the loss, or you go long dated freaking leaps. And I don't want to do that, right? So I need to know for what he's doing here. It's not an apples to apples comparison to what I would be doing on expensive stocks. So if you're still here, Wes, and you maybe are, I have to scroll down and look, but can you still make money if it drops 50%? Would you double down? What would you do? I don't think I would double down with 10K,
Not on a
that's a
stock like that, I wouldn't.
10 freaking grand. So if you all had a big windfall, would you throw it all in the market right now?
So you're
Depends how
saying
much
you had a
time I
big
have.
windfall?
Depends how much money, or depends on how much time. How old am I? How much time do I have before I retire? Would you, Gerry? Would you have like 10 years left? I think 10 years
Um,
left, I would.
Big windfall. Well, I just kind of did, and I just threw it on mostly into the options account. So I guess that
That's
kind of answers
great.
that.
Yeah, I think the option is a good way to go. When your options account gets a little bit bigger and it's harder to manage, and that's when you start dumping money into portfolio
Right.
coma money, right? I'm trading options only in my tax sheltered accounts. I am making money, but small increments. I am considering trading in my larger brokerage account. Maybe more potential there with margin. Yeah, for sure. But you already got the mechanics down. So
Yeah.
let's see, guys. Basically, leave Sandal out of it. That is not even supposed to be in the colony. Okay, what stock's in the colony? So like a Ford? No, Ford's not even $9 stock anymore.
Yeah, there's what's under $10 nowadays.
Sirius radio is.
Yeah,
Um, I looked at the pre-owned Sirius radio. It was shitty. It was
yeah.
really bad.
I don't know
Um,
what's under $10 nowadays. I did AHT. That was like a $5 REIT.
Look at my spreadsheet. Okay, yeah, we'll have to look at the spreadsheet. Um, I'm willing to try it, but I'm not willing to put up 10K, for it to go into zero, because there's a way bigger chance of the stock like that going to zero. But then again, we're assuming it was Sandal. I mean, or some shit stock like that. Maybe he's got a better selection of stocks. Um, what's your name in the Discord? You know what his name in the Discord is? Is it Wes?
Prime time.
Oh, it's prime time. Okay. Maybe that's the reason why, because I think he did post a spreadsheet in there and I looked at it. So I didn't recognize any of the tickers. Like, what the hell are these? But I'll have to go in there and look at it. I mean, I'm willing to try it, but I'm not willing to put up 10K. No freaking way. To make, if there's like a Ford, I'd be okay with, because I don't think Ford's going bankrupt. Like
Ford's over $15 now.
Yeah, well, I'm just saying, even if it was $6, like it was not going bankrupt. That company's got a lot of pride, a lot of pride. 100 contracts assigned at a $1.05, $1.50 is 15 grand. Jesus Christ, what do you do if the stock? Well, what ticker are you doing? Investor Retire, is that Sandal? Primetime's doing something else. He's not doing Sandal, so. Both of you hold Nusi, I believe. Do you know where I can transparently see their option strategy each month?
Yep.
It's right on their website, holdings.
Yep. They update them daily. So you can go to their website and download the holdings, and you'll see the current holdings.
They pretty much put the two new options on every month, though.
Yeah.
Yeah. So there's a caller out there. So it should be a covered call. Well, it's a call and then it's a put. I haven't looked at it in a while, but yeah, go to their website. I mean, I might actually have it here because I used to go look at it all the time. Let's see, Nusi.
But yeah, all ETFs are required to disclose their holdings daily. So usually you'll find that on the websites of whoever the issuer of the ETF is.
Yeah, holdings. So the holdings, I'll post it in there. Go to this website, and then on the bottom right, there's holdings. That pops up like an Excel spreadsheet. And then there, you'll see the holdings, but you'll see the two contracts against the NDX. And then you have to kind of decipher what strikes they use for the NDX. Let's see here. I wouldn't touch Sandal. That's already close to zero. Yeah, well, I agree. But that's not what Primetime's doing, apparently. So it might just be invested in retires, risking his 15 grand or 10 grand. Don't touch. There we got investing teachers weighing in now. Don't touch Sandal. If it goes to 1, it's likely going to 72. And the premium is too low. I'll have to look. Did you pull that spreadsheet up, Gerry?
No, I didn't.
Okay. I wonder which options, what options channel it's in. It's more of a gamble trade. Perhaps AMC would make you more money instead. Nah, I wouldn't be doing either one. See, I'm understanding you think it's safer because you have less capital at risk. It depends on what stock he's doing. There is some solid stocks that are probably between $5 and $10. They're way less riskier than Sandal. I just don't know of any anymore. Do you, Gerry?
Under 10? Not that I would want to own. See, I think that's the key here, and why I have the biggest problem is there's not a lot there that I would want to actually own. Common in.
Well, get rid of that owning it out of your equation, because maybe all that really matters if you're doing what Wes is talking about right here, is whether it goes bankrupt or not. That's all that matters. If it has a potential or has a big risk of going bankrupt, why does that matter if you don't want to own it then? If we want to own it versus not own it.
Yeah. I mean, I do things with low price stocks, but I normally do not do a whole bunch under $10. There's just nothing there that I like.
Let's see. Invest to retire. Tasty has a contract commission cap. Oh, okay. I think you can do that IB too, but I wouldn't want to turn it on because that would screw all the other shit I was doing in there. Yeah, and I just, I mean, that would destroy me in commissions. $100 in commissions just to make $400. I don't know, and risking 10 grand. That's just an example. I'd have to. Yeah, that would be a boatload of commissions in IB, and you have to specifically probably change the commissions plan if you were just going to just do that strategy.
Yeah.
I don't think they let you do on the fly. Okay, I want to do this one for this trade and this type of plan for this trade. They don't have that option. It's either what do they call it, lot based, or it's trade based. If that makes any sense. Yeah, of course you guys go for options. Yeah, there's small possibility I might have a windfall coming. Depends how much money it is, Rebecca. Yeah, I mean, honestly, I understand why Gerry put in the options account, so I get it. Love discussion, MDB. Dave, this is simply a strategy to add to your game. I still run 40 spreads and 40 puts, but this is another, okay. I need to see, like I said, if I have to have 50 contracts or 100 contracts on, it's just not going to work. Plus, I need to look at the positions you're doing it on too. Let's see, would I miss something here? Gone in, say, a few of mine have gone in half. I still day in and day out get paid well. Yeah, I'll have to look at it. Go into go in the Discord, just where you posted that information and just at me in there. That way I know where to go and I'll look at it. When meaning to play larger stock, there's a bunch of guys doing PMCCs and they make returns, but these stocks are gold pair. Yeah, I don't even do PMCCs anymore. For most cases, it's not my wheelhouse. Too much at risk. Stock goes down, you're down, 10, 15 grand or whatever, and then you gotta. Yeah, I don't like that. It's been 2 hours and 17 minutes, everybody. We're gonna call it here. Appreciate all the questions. I love the discussion. I'm gonna go ahead and take a look at Wes's information in the Discord. And Gerry, you want any final thoughts there?
No, I just want to say, I'm not bagging on anybody's strategy. It's not that. I felt a little bit of I don't know, something there. So
Called hostility.
Yeah, a little bit, just a little bit, and that's fine. Your strategy is your strategy. We'll take a look at it. We'll discuss it for sure. No problem. So that's all I got. This was great. This was fun.
This was. I enjoyed the conversation. Nobody get their panties in a bunch. Mine are not in a bunch. Gerry's not in a bunch. Nobody else get theirs in a bunch. So we'll see you next week. Let's have a good freaking week, everybody. Futures are flat. All good say they were down. So, but anyways, we'll see y'all later, everybody. Thanks for joining.
See ya.